whales are selling. There are OG whales that are selling. I guess anything's possible. The U.S. government is extremely large.
Does the U.S. government still have that Bitcoin? What's going on there?
Not every coin that the U.S. government may or may not control at the moment is...
Did they sell the Bitcoin?
Looking at the addresses in various cases, and then we look at that address, see that it moved to a new place, and now it's just, long story short, I don't know what to tell you. Like, people, like, you know, this is what drives so many to look for the next Bitcoin, right? And
the most bullish cycle ever, bro. Like,
feels like, you know, the beginning of a true, like, second or third act for Bitcoin. Your life won't be better than your parents, that you may never, you know, reach the American dream. And as far as I'm aware, there have never been centralized companies with publicly listed equities whose sole purpose is to use leverage and dilution to acquire a commodity. They're safer than ICOs in that sense.
The amount of people that are taking self-custody is actually going on a downward trend. Should people be buying spot Bitcoin these days if MicroStrategy is going to outperform? Welcome to another episode of Simply Bitcoin IRL. Today I have a very special guest. I have the head of Firmwide Research, Alex Thorn, in the house. How you doing, Alex?
I'm great, Nico. Good to be here, man. Good to be back. Just an exciting time. It continues to be exciting. You know, I don't know. I can say this every time, but this market gets weirder and weirder.
Bro, it's so weird. I mean, this cycle, you know what I've been saying? I've been saying that, like, this cycle from, like, a price action from a news perspective has been the most bullish cycle ever, bro. Like, the president is like, hey, look, I'm like one of the biggest treasury companies now. You know, he's saying, like, I want to make Bitcoin, I want to make, the United States the Bitcoin capital of the world. Like, it's all this stuff, like all the treasury companies, Sailor's like taking over finance, creating his own central bank. And then the price action is like,
I agree. I mean, insane levels, like billions being raised and deployed, insane ETF flows. But I mean, you are seeing whales are selling. There are OG whales that are selling. You know, if you
who are they? Are those whales?
Yeah, I don't know. I think, you know, one of the whales that recently moved these 80K coins, I think Sani, who's one of the best, you know, from Time Chain Index, one of the better Bitcoin on-chain analysts, said it's one of the last 10,000 BTC UTXOs that's not attributed. So, you know, maybe we're through the unknown whale era. Maybe it's now those guys, if they're cashing out into MicroStrategy or ETFs or Metaplanet or CEP or all these, right? You have a whole new, it feels like, you know, the beginning of a true, like, second or third act for Bitcoin now. Like, it's a whole different scale and type of market participant.
100%. And the price action reflects that, right? You could see that it's institutional money buying. It's smart money buying. It's not retail, because you don't see these kind of parabolas, like, kind of, you know, mania phase yet. Perhaps we haven't reached there yet, but it's been this, like, kind of slow trickle, right? They don't want the price to go up 20% when they're buying $500 million, right? So, you know, I think they're deploying it strategically. Now, I don't know if you saw that post by Willy Woo, but Willy Woo, you know, very famous analyst in the community. And he basically, I don't know if he was trolling or, you know, boating accident, LOL, but, you know, he basically said, I don't have any Bitcoin right now. You know, there's more return potential in investing in Bitcoin startups. And that leads me to my question, which is, like, should people be buying spot Bitcoin these days if MicroStrategy is going to outperform, if Metaplanet's going to outperform? Like, if you're a traditional investor, you know, if you see what MicroStrategy has done over the last 24 months, you know, what would you tell them?
I would say that you need to own Bitcoin. In terms of buying it as an investment, I think you always have to be reconsidering your theses. I think there's an easy 10-bagger here in Bitcoin still over the next, you know, 5 to 10 years. I don't think that's crazy at all when you look at things like gold parity or, you know, obviously, like, the supreme scarcity that is only getting more scarce. It's transition in a multipolar, like, sort of geopolitically more complicated world. I think it will transition more into a gold-like asset, but that also means people will probably start to get more gold-like returns rather than, you know, the, you know, 10,000x that you got when you invested in the crazy internet money that no one had ever heard of, right? I mean, it's maturing. This is sort of natural. I do think, like, look, if you savvy investors want to beat an index, right? Whether that's the S&P, if you're an active, say, equity hedge fund manager or something else, I think it's reasonable for professional investors to try to beat the price of Bitcoin. I don't think most people will long term. If you look at its, compound annual growth rate over many years, it's hard to beat that. It's certainly hard to beat it with like, index funds. But I do fundamentally think there is a large amount of upside left in BTC before it becomes a gold-like widely adopted asset. But even beyond that, if you're not an investor, if you're a person, whether that's a legal person like an entity or an individual, you need to own Bitcoin yourself because um, you can't, you get no censorship resistance by owning shares in a treasury company. You can't send it or use it. You can't send it cross-border. You can't hold it in a multi-sig. There's the actual features of actual Bitcoin are unfortunately not replicatable by treasury companies, right? Those are equities. You own shares in a company that itself does something. In the case of, something like Strategy, that something is own and acquire more Bitcoin, but you don't have access to that Bitcoin. You can never withdraw that Bitcoin. And recall, like, that to get the full feature set from Bitcoin, you actually have to not only directly own spot Bitcoin, but control the keys to it. So I would encourage everyone to build a stack so that you have that lifeboat freedom money that Bitcoin is so famous for providing. And then I think from an investment standpoint, every savvy investor is always reconsidering their theses and what they own, and is there something better to own. The most aggressive investors will look at something, let's say they make 50% in a year, but there was another bet that they could have looked at or passed on that made 75% in the year. A lot of the most aggressive investors will be upset with themselves for that, right? So there may or may not always be a better investment, but in my mind, from a risk return standpoint, Bitcoin is still a very good investment, even at these levels from 119K.
Yeah, and let's you said something really interesting. I kind of want to double back and focus on that aspect, which is, the fact that you still see, this 5 to 10x opportunity within the decade. But I mean, like compared to Bitcoin's early days, that's not really that exciting. Me and my co-host, and we host Simply Bitcoin every single day. I mean, like every weekday, and we're like kind of joking around. We're like, dude, are we just like cheering on like gold and the S&P? Because that's what the price action movement feels like. So, you know, um, I think a lot of people that are getting into Bitcoin recently, I don't think they see it as much. I don't think they see the upside as much as, perhaps in when I got into 2016, 2017 era, or, that even the 2021 era was, I think we got like a 5 or 6x in a year. Um, so what are your thoughts on that?
This is what winning looks like, I guess, is what I would say. Look, I mean, the S&P 500 is up 13.1% year to date in 2025 on July 22nd. Bitcoin is up year to date. Sorry, that was 1 year. It's up 6.8% year to date. The S&P 500 year to date in July 25. Bitcoin's up 27% year to date. So, I mean, you're looking at something to get those, 10,000x, like, well, I'm sorry, you and I shouldn't have been playing Halo in 2010. We shouldn't have been playing Counter-Strike, right? And I mean, I don't know what to tell you. Like, people, like, this is what drives so many to look for the next Bitcoin, right? And but like Bitcoin was a low cap, untested, uh, you know, like tiny little thing back then. To get those gains, you had to have significant vision and still pretty good size. Like, I mean, I bought Bitcoin pretty early in 2012 and 2013, I think. And I didn't really have any money. I didn't buy a lot of Bitcoin, even if I still had those Bitcoin, which I don't, because I sold them at some point back then. It still wouldn't be the gains. I mean, you'd have to either be mining as a true hobbyist before there were any tutorials or anything at all, and the community was a couple hundred people, or you had to put pretty sizable money in for an average person and hold it for 14, 15 years, right? I mean, there's a very small number of people that fit that category. Like, and I think the stories of them, they drive people to look for these penny stocks 1000x. You see people say, well, it's 10 cents, but if it goes to $10, well, yeah, okay, that's always been true. Very tiny number of people ever hit a return like that in their lives, right? I think the vast majority of people should be looking for good investments that go up with a variety of risk profiles, right? And you can take a big risk if you want, that's fine. But there is, I think, part of the reason that is particularly younger people these days are looking for these astronomical gains. It stems partially from a deep malaise in the economy among these younger generations um, a sense that our lives will not be as good as our parents' lives, that we won't make as much money. The average age of a home buyer, the median age, I think, is 39 now in the United States versus something like the 20s, a couple decades ago. That your life won't be better than your parents, that you may never, reach the American dream. And in that spot, too many, I think, are enticed by gambling. Look at the rise of sports gambling as a great example. These low cap, long shot bets. They would rather gamble and risk it all to get it all, because the idea of long-term investing and hard work just doesn't seem fair in the way the economy has become constructed, right? Decades of crony capitalism and bailouts and money printing have led people to gamble rather than learn about saving and hard work and the savings technology that is Bitcoin. I think that's where a lot of, low cap crypto gambling in the trenches uh, stems from, is this deep-seated malaise among millennials and Gen Z.
This nihilism just based on the fact that they got the short end of the stick, 2008, they don't have the opportunity their parents have, and, they're looking for a quick way out,
Yeah.
right? Um, yeah, that's a very fantastic point. And another thing I want to bring up to your attention too, Alex, which is, I don't know if you saw this chart, but another thing that worries me a little bit with the rise of all this um institutional money coming in is, I don't know if you saw this chart, but essentially the amount of people that is taking self-custody is actually going on a downward trend. It's not going on an upward trend. And this wasn't the case until the introduction of the ETFs in January of 2024. And then of course the MicroStrategy stocks, right? Um, what's your take on that? Because I think, like, if most Bitcoin is not held in self custody, or at least transparent custody, where, El Salvador, you can see their reserve, Tether, you can see their reserve. I think the risk of paper Bitcoin starts to increase over time. And there's also a tremendous amount of centralization of custody of Bitcoin. A lot of it is in Coinbase. I think it's like 9 or 10 out of whatever ETFs. They all have their Bitcoin with Coinbase. I think Sailor has his Bitcoin with Coinbase. So it creates a honey pot, and then not only that, like, do they really have the Bitcoin they say they do, right? So what's your take on that?
Yeah, it's a great question. I mean, I think that, look, at the highest level, I don't think it technologically matters. There, proof of work coins like Bitcoin, the who holds the asset and where it is doesn't necessarily determine or directly determine governance control over the network the way it does in a proof of stake asset. But, a couple points you were making. I mean, when it comes to people holding large amounts of coins in centralized entities, institutional entities, whether it's BlackRock or Fidelity or Invesco or Strategy or Metaplanet or whatever these things are, um, they do have some influence over the network. You could imagine in the case of a contentious hard fork, they, have some amount of what we call fork choice selection, right? They could say, BlackRock were to say, let's say there was a fork, another, block size war or something. They could say, listen, guys, us and all our investors in our fund, we're going to consider, fork XYZ, the real Bitcoin. Like that could be very impactful, and it does matter. But it's sort of intangible. It's a soft form of power. They can't directly tell everyone to upgrade the way that you could if you controlled an enormous amount of a proof of stake network. I do think it's sad to see that self-custody isn't on the rise. I mean, this is a core feature of Bitcoin, in my opinion. This is holding your own keys gives you self-sovereignty. It distinguishes it from all forms of digital money that exist. Even stable coins under the new Genius Act, which was just signed into law, which I think they are an innovation on digital dollars, because you can't even self-custody, you know, digital dollars today. You have to use a banking app or a fintech app, or there's no way to like take self-custody. And you can take self-custody of the stable coins, but of course those are freezable and seizable by the issuer, either at the direction of the government or anyone else, or themselves, whereas Bitcoin is not. So Bitcoin is that ultimate step of digital sovereignty, and you only get it if you hold your own keys. It's never been easier to hold your own keys. So it is sad to show the improvement in the UX of self-custody is still that we have had over many years. It's much, much easier today than it was 2 years ago, 5, 10 years ago to see it, you know, but with real capital and entering, a lot of, with not just institutional investors, but a lot of, older people that have brokerage accounts or investors that invest in other things that want some exposure to Bitcoin. The ETFs are so easy. Like the UX for an existing investor in things to buy the ETFs is better than buying spot and sending it to self-custody. So well, one of the things I hope is that you'll see the brokerage firms, especially in the big banks, especially as we get more clarity out of the U.S. federal government's treatment of digital assets broadly, see them start to offer more spot products so that it actually becomes possible.
Mm.
Fidelity offers spot Bitcoin, but you can't yet withdraw, and I'm certain that they will eventually add the withdrawal. It's kind of like the pathway these often go, right? Robinhood and PayPal both started with you can buy and sell, but you can't withdraw yet. And then maybe if it is still easy for a mom and pop or institutional investor to buy spot through their existing brokerage relationship, they can then also learn about self-custody, and they may realize, I think you're going to have Bitcoin in sort of everywhere that you have money and investments. So you're going to have, bank Bitcoin. You might have 401k Bitcoin, retirement fund Bitcoin. You might have brokerage account Bitcoin. And what I hope is that people learn and at least have some, under the mattress Bitcoin, right? At least some. You should always
Yeah.
have some. That's actually using the network. And I get that, for people in the Bitcoin community on X or, at conferences, like it's sacrilegious in some cases to not store your own keys or even run your own node. But if you want, for Bitcoin to win and reach the promised land of wide adoption, you're going to have Bitcoin in every possible way that it could exist. So it's on us as, influencers, educators, researchers to continue explaining the benefit of self-custody. And that, by the way, includes to the institutions, right? You talked about, MicroStrategy not doing proof of reserves. Like, not only should they do proof of reserves, but they should probably custody their own coins at some point. And I would think any governments that
Yes.
decide to have strategic reserves should also be self-custodying as well.
Yeah, absolutely. And then self-custody and making the reserves public, like making that address public. There's no reason as to why you shouldn't be doing that. And that also builds a great deal of trust, and it's taking advantage of the open ledger system. Like this is where gold failed, right? We have to take, I'm not saying it's not there, but we have to take the government's word for it that, all that gold is at Fort Knox, right? It's like trust me, bro, kind of system where, we have this open ledger protocol where you don't have to do that anymore. Question for you, Alex. Are the cycles dead? Or is it just evolving now that, Bitcoin's definitely grown up? It's definitely heading into the institutional era. Are these traditional 4-year cycles that we've seen throughout Bitcoin's lifetime, are they still
Man,
intact?
good topic everyone's been talking about. I think back until last winter when the ETFs launched, I think a lot of people, you see the passive flows in the ETFs and how they unlock capital. Um, had a lot of people wondering that, and I think there is some truth that the cycles will not look the same as they did in the past. I think that is right. I think um,
Mhm.
there will always be business cycles in credit and monetary, certainly as long as we have fiat currencies. There's always credit expansion and credit retraction. And that is also sort of a natural human tendency. We tend to get really excited, do a bunch of stuff, or make a bunch of investment, or build a bunch of things. And then we usually get over our skis a little bit and then have to pull it back. And then everybody calms down again. And then you go, right? Like that's kind of a natural human behavior, even outside of economies, like, even working on your house or working on your car, whatever it is. Like we tend to sort of overdo it and then pull it back and then get comfortable again. So we will have cycles. I just don't think that, obviously to the extent that cycles were driven by Bitcoin issuance, right? The halving cycle, I don't think those really matter. I don't think they really probably have mattered for at least maybe one, but maybe even two halving cycles. Because right in an absolute basis, the reduction in net Bitcoin issuance daily or weekly, monthly, yearly, whatever time frame you want to look at, is so minimal at this point compared to the daily transacted volume on the network or the traded volume globally on exchanges and OTC, as to be basically, unimportant, right? So I don't think it would be driven by the halving. I do think that you get people who take gains, then they look with those gains for the next investment. And so the intra crypto cyclicality, right, where it used to be like Bitcoin all-time high, December 2017, Ether all-time high, January 2018, a bunch of low cap altcoins did stuff, and then everything, goes to zero. Not to Bitcoin didn't go to zero, but most other things did. And then you restart that. I think that still happens in microcosms in this market. You've kind of had it the last couple of weeks with Ether running, 30% last week alone. But I still don't think that I think those are also dampened. I think, capital in a Bitcoin ETF is not like Bitcoin held on Poloniex in 2017, where it's very easy to trade the
Yeah.
Bitcoin for an
Yeah.
altcoin, right? Like these new pots of capital are stickier, right? Whether it's Strategy or these other treasury companies or the ETF. So less likely to rotate than in past years. The investors are more mature, less likely to be enticed by the next quick gain that they could get. The Bitcoin halvings have a de minimis effect. And now you have these passive bids, right? And if you start seeing governments get involved, or people earnestly doing it in their retirement accounts, which has been a passive bid for U.S. equities for years, right? Like that should all dampen volatility and thus cyclicality. So I don't have it's not a firm yes or no, Nico, but I do think the cycles, if they exist, will look a lot different.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
I think that is a good answer, because there's a lot of nuance required to answer that question. It isn't just a yes or no answer. It's you have to give the context. So I did enjoy that answer. So my second question is, did wait, I completely lost my train of thought, so I'm gonna look at my notes. Okay, here we go. So, oh, okay, I remember now. Um, do you think that the Bitcoin ETF? Wow, this is such a. I love asking this question. Do you think that the Bitcoin ETFs are the ICOs
I
of
don't
this
think the
cycle?
ETFs.
No, sorry, not ETFs. I apologize. The Bitcoin Treasury companies.
Man, and it's a good question. I would say first, it's a very good question. Without giving I'll give a nuanced answer in a second, but I think shorthand, it is fair to say that yes, they possibly are. They're the meme coins of last cycle, the ICOs of the NFTs of 21, and possibly the ICOs of 17. It is an investment fad. It is novel. It is totally novel. There's never been. I mean, we're tracking over 120 digital asset treasury companies. I don't know if Bitcoiners are aware, but it's not just Ether. I mean, there's a Chinese limousine company doing an XRP strategy. I saw there's a new Dogecoin strategy. So there's a bunch of these. As far as I'm aware, there have never been centralized companies with publicly listed equities whose sole purpose is to use leverage and dilution to acquire a commodity at scale. Never heard of that. So it's new, just like those were new. I think it could be drawing demand from spot Bitcoin. I think that's possible. On the other hand, a lot of these are buying spot Bitcoin. And I will say, unlike the ICO, if they're publicly listed U.S. companies, well, generally publicly listed in any credible jurisdiction, but let's talk about U.S. equities, they do come with significant disclosure and oversight regimes that are meant to protect investors. So unlike ICOs from 2017, when a white paper alone could let an issuer raise $1 billion with basically no promises and no standard for disclosure, that's not how publicly listed U.S. equities work. So they're safer than ICOs in that sense, and they are a fad. And who knows, will they be here to stay? I think certainly some will make it through and become long lasting. I don't think strategy is going anywhere. With the Bitcoin ones in particular, you wonder, who else can cross that chasm and last. But hey, some of the projects that raise ICOs are also still here. Certainly not all of them, but not all of them, didn't launch or disappeared or were outright scams. They might have resulted in projects or blockchains you don't think are useful, but some of them do exist. So
I saw the Link CEO or sheet to the Rose of Trump at the White House the other day. I have no idea what Link is.
leaked in DeFi. I mean, I would say not that without passing judgment one way or another on the product
Really?
and project, it does exist. It did launch. It didn't rug. It might not be good. I don't know a lot about Link. I don't know if it's a great investment or a bad one or anything like that. But like another one, Cardano, which, I happen to think is a mostly useless blockchain. It did launch. It is a real blockchain. It does operate, right? Like, so, you know, even if you end up thinking that they're not good investments, it doesn't mean they're all scams. Even though many ICOs were literally scams, right? Like, where people, delete the white paper right after raising and disappear on the internet, right? Like, that is very unlikely to happen with the treasury companies because they are, well, at least the ones that are in the US and going and trying to be publicly listed companies, they're highly regulated, right? So I would say that's a key difference. But I think from the investment standpoint, like, I have to think just surely many of these will fail, right? Or they will fail. I think a lot of them will fail to actually raise the money that they've announced they're trying to raise. And so they won't even really launch, I think is a possibility also. I do think, though, even I did some of the direct comparisons between the two, but even setting that aside, it does feel like if we just think about hype narrative, like I think about ICOs in 17, NFTs were a huge hype narrative in 21, meme coins in 24. Like this does kind of feel like the 25 hype narrative in broader crypto markets. And I mean, you have to
It
give
does.
credit separately, not maybe blame too for the explosion of them, but Saylor has grown a behemoth and he's found a way to tap pools of traditional capital and
Mm-hmm.
steer them towards Bitcoin investment in ways that I think will honestly be studied for decades, right? I mean, truly a feat of financial engineering to achieve a specified end that has never been done. And I don't think many will be able to successfully copy it.
Yeah, I completely agree, and it seems like he's created a product to target every pool of capital, right? Like, it's, like, one for the bonds, one for, like, the gold investors, one for, like, people that just are holding like, there's a product for every single thing, which is absolutely fascinating, so I agree, the financial engineering there has been, absolutely crazy to say the least. Alex, I wanna get your thoughts on this because I don't think you've come on the
I
show
think it was on last
I
year.
think it's been a while since you've come on the show, but, um, so yeah, so it's a totally different world. We won, right? Which is massive because last year we were like under attack. Our industry was under attack. November was a big victory, and many Bitcoiners, I remember calling this out when it became apparent. As soon as they arrested the Samurai Wallet developers, I said, like, guys, listen, let's be real here. It's probably not a good idea that Biden wins another election. And then I remember that tweet blew up, which tells me that it was everybody. It
Yeah.
was on everyone's subconscious mind, but no one wanted to say the quiet part out loud. And then a couple weeks later, you have Trump on the campaign trail basically saying no CBDCs, and everyone's like, yeah. And then he's like, you
Right.
guys like that? No CBDCs. And I remember I was telling my co-host Opti, I was like, all right, dude, like probably like 2 or 3 weeks, he's probably gonna say Bitcoin. And then he goes to the libertarian, convention. He's like, all right, if you vote for me, I'll end Operation Choke Point 2.0, free Ross and Bitcoin. And everyone's like, I'll keep Elizabeth
That
Warren doing it in the conference.
Bitcoins.
Um,
Yeah. Yeah.
yeah. It was hilarious. It was hilarious. The guy's a character.
Yeah.
And we haven't talked since then. So like, bro, like this is a totally different world. The executive order, the strategic Bitcoin reserve, there's supposed to be something that came out today, by the way. I don't know.
Yeah, I know
If it hasn't come out yet.
enormous amount of talk about that, the presidential working group report. Also, Nico, I mean, an enormous amount has happened. Okay, like the banking regulators, the Fed, the FDIC, OCC, they've largely rescinded their antagonistic rules. The OCC rescinded their Biden era stuff that prevented banks from touching blockchains at all, touching Bitcoin, custodying it. They just put out guidance for bank risk managers, all three together, saying how to custody. And it's literally a checklist for, like it is a risk
Oh, I saw
checklist
that.
for a bank's risk manager to say, if you demonstrate to us that you're doing these things, then you can custody Bitcoin. And that's normal for a risk manager to need to know what to cover and how to design their custody program or whatever the product is so that when the banking examiner comes, they'll have done it right. So important steps there. SEC's done an enormous amount on a variety of things. They said mining pools are not securities, right? Your interest as a miner when you send, your hash shares to a mining pool does not count. That relationship between you and the pool is not a security. They've said tons of other stuff too, on mostly like crypto related, but tons coming out of the SEC. You had the presidential working group, which ordered the government. That's an executive order on like the second or third day of the presidency that orders the government, agencies across the government to look at like every crypto related policy that may or may not be within their regulatory jurisdiction, decide if it's good or bad, if it should be changed, if there's some that don't exist but should exist, and then go ahead and make those changes. And it also ordered a conglomerate of those agencies, sort of led by the Treasury Department, to write this big report, the Presidential Working Group Report on Digital Asset Markets, that is due from that working group to the White House today on July 22nd. It doesn't mean that the White House will release it today. In fact, I expect they'll probably publish it next week before the end of the month. That's going to have a giant pile of recommendations of government policy as it relates to Bitcoin and digital assets across the gamut. And then obviously they have the strategic Bitcoin reserve executive order, which, man, that really went a funny way. You remember it was that weekend that Trump tweeted that ADA, XRP, and Sol would be included in the reserve. And he hadn't even said Bitcoin yet.
Dude, and I remember, and I had some like sources like in DC, and they were telling me what was going on in the back room, Alex. And it was basically the Ripple lobby was like putting a tremendous amount of pressure on the Trump administration. And like I was just, and I remember I was getting these texts like, Nico, retweet this from the Simply account. Like, you have to put attention to this. Um, and it was the Ripple guys like trying to buy themselves into the room. But what I find absolutely hilarious is masterstroke, right? Like a strategic Bitcoin reserve and then a digital asset stockpile. And then you see Brad Garlinghouse at like the corner side of the table when he had it. So it was just incredible political maneuvering by the Trump administration. I mean, we got everything we wanted, and
Well, it was almost like that.
um,
There was a
yeah.
Politico story that also went behind the scenes after the fact and explained some of how that Ripple thing got added, and seemed like they overplayed their hand, and it backfired significantly. You even had, I was cataloging that day on that Sunday and Monday, you had Brian Armstrong come out and say it should be Bitcoin only. You had major like crypto executives that certainly have interest outside of just Bitcoin saying, okay, wait a sec, XRP and ADA and Sol, like this has gone too far. And it was the backlash that I think resulted in the strong language we got that was Bitcoin. Because remember what we ended up getting in that executive order is a prohibition on the government ever selling its Bitcoin, right? And then an order to parts of the government, Treasury mostly, to develop strategies that are budget neutral to get more Bitcoin, while simultaneously saying that the digital asset stockpile, everything other than Bitcoin that the government has, they should try to keep it, but they don't have to. They're not prohibited from selling like they are with the Bitcoin, but they are prohibited from buying. So it's like Bitcoin ended up getting exactly what it wanted for the strategic reserve. And really everything else is technically in a sell-only mode at the U.S. government. They can get more through civil asset forfeiture or criminal penalties and stuff like that, but they can't buy it, and they're not prohibited from selling it. So it went from like, wait a sec, it's going to be like Bitcoin, Ether, XRP, Sol, and ADA on a Sunday, to that Thursday, I think Thursday night when they released it, it was like, oh wait, it's Bitcoin only and everything else like could be sold.
Yeah, dude, it was like the art of the deal, because I went through like emotions, like I was like, oh, this is such BS. And then I was like, it's Bitcoin only, like, yeah, Orange Man, good. But yeah, I remember that. Like it was so cryptic, it was like he's not mentioning Bitcoin, but now you look back in hindsight and you could tell he did it on purpose,
Crazy.
right?
I don't
It
know.
was
I don't know if Trump did it on
very, very
purpose. I'm not
very
sure. It
wise.
does look like art of the deal. I think it could also just be like wildly overplaying your hand. From not from Trump, but from the altcoin promoters.
Yeah.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally have not only an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you could pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you. Check out ledn.io today.
So another thing too that came out recently, and shout out Lola Leets, which is apparently the U.S. government doesn't have as much Bitcoin as originally believed. It seems like they sold a lot during the last days of the Biden administration, which a lot of us were actually suspecting they were doing. But we don't know this for sure. This is only data coming out of U.S. Marshals office or whatnot. But what's your take on that? I'm sure you've done more research on this specific topic. Like, did they sell the Bitcoin? Does the U.S. government still have that Bitcoin? What's going on?
Intelligence, right? I think that the commonly accepted crypto market view of how much Bitcoin the government probably has is about 200,000 coins, right? Which is billions of dollars. And that list that is based on-chain attribution that is mostly related to looking at the addresses in various cases that the government says from which the government says they seized coins, and then seeing where they moved them to and if they haven't moved since, right? So like, if Alex is under arrest and they put in the thing that we seized Alex's like, BC1Q, whatever Bitcoin, and then we look at that address, see that it moved to a new place and now it's just inert there, we assume that new place is the government, right? And you add all that up and it still looks like hundreds of thousands of Bitcoin. I got to give Lola Leets credit. It's a great piece of journalism, but it is what you said. It is what the U.S. Marshals Asset Forfeiture Division says that it holds, or owns, I should say, said that it controls, right? It's a list of addresses that it controls. The U.S. government's very big, okay? Not every coin that the U.S. government may or may not control at the moment is in the possession of the U.S. Marshals Asset Forfeiture Division, right? And part of me thinks that she asked there because David Bailey had put out a bounty for that specific thing, right? Like, he didn't say how much Bitcoin does the government have. He said how much does the U.S. Marshals have was the actual bounty. So I think the U.S. Marshals are not the U.S. Treasury Department. I think one of the reasons we still haven't seen the coins move, almost none from those addresses that people think belong to the government. They haven't moved. So if you believe they were sold, I think the idea is that, well, if the government let's say some of those addresses are at Coinbase and the Coinbase is holding it for the government, Coinbase just coins are fungible. So Coinbase can sell those coins on behalf of the government while actually just delivering other coins and not moving the coins, right? Delivering other coins to the buyer, right? Reledgering them internally could be done. So they could be sold. To be clear, we don't know exactly what has or hasn't been sold. But I would caution, I don't think the government went from 200,000 coins under its possession to what 28,000 is what the marshal says at all. And I think there are also 93 U.S. attorney districts, right? Those are the criminal lawyers for the Department of Justice, right? There's the Southern District of New York and the Eastern District of New York and the whatever, right? They're all over. Like, they have a level of autonomy. They don't, when they arrest, a criminal and find Bitcoin on a ledger or a cold card, they're not required to instantly send it to the marshals either. So I think the process of gathering the coins for the reserve itself is technologically and logistically complicated. And it's also legally complicated because there are civil asset forfeiture laws. The government is not necessarily free to do whatever it wants with things that it confiscates as part of criminal investigations or as the proceeds of crime. So it's possible that maybe the marshals holds a lot more, but in the context of setting up the reserve and doing legal analysis on every little piece of coin that might be there, the Treasury might have said, hey, these like 80,000 coins that you're holding, those are going to be ours. So those are no longer in your control, although we choose at the moment not to move them on chain, right? So it is even possible that the 28K that the marshals, it's possible that they've identified is every coin that won't be part of the reserve. And that the others, they didn't say, here's every, key that we've ever held the keys to. Here's every UTXO we've ever held the keys to, right? It's possible that by the time, that I think that the snapshot is what, March 31st. So like that would be pretty quick after the SBR EO came out, which I think was like March 6th. But it's possible that Treasury said, look, those 100, maybe they had 128 and Treasury said, hey, actually those 100, we've done the work and those are ours now, but don't move them. We don't want to move them yet. So like it really, I don't actually think it tells you much, is the long story short, about how many coins the government actually possesses or how many coins will or won't end up in the strategic reserve. But it is a fantastic, I think we know that, the Marshals Asset Forfeiture Division has only those, somewhat about 30,000 coins. I just don't think it tells us that they sold, and it doesn't really help us in figuring out which part of the government thinks it controls which other coins.
And so I heard a rumor, and let me know if you believe it's true, but I heard the rumor that uh, basically during the Biden administration, Janet Yellen had all the US government's Bitcoin on a cold card in her desk. Is that true?
I did not hear that. I have no idea. Um, I don't think it's true. I would guess it's not true. I think, but there had been, for sure, there had been cold ledgers and evidence lockers around those federal prosecutors' offices. Like, that's what I'm saying. Even just like finding all the coins that the government supposedly has, like, is not the U.S. government is extremely large. I doubt Janet Yellen herself was holding them in the Treasury Department, but I guess anything's possible.
It would be a funny image, and I'm just like imagining that in my head, just like her pulling it up, like putting in her pin, like, oh man, I got the pin wrong. You have the world's. Um, we've lost the Bitcoin. Anyways, so what do you think is the current state of the Lightning Network and second layers? Because we all know that just Bitcoin can't scale on the first layer. What do you think the current status of second layer solutions are? What do you think about Lightning Network? There's Fediment, right? There's Liquid, right? There's a couple, different types of solutions and stuff. Um, and then there's like, I would say, which kind of connects to that question, which is like, is Bitcoin actually being used as money right now? Because I see it really being used as a commodity, as like this, thing that, to use sailors' words, this pristine collateral, this encapsulated energy. But is it actually being used as money? And I believe it was Jack Dorsey that tweeted out, like, if Bitcoin isn't used as money, it is a failure.
It is being used as money. It's not probably the circulating supply of all coins, which is like 19.8 something million at the moment. Not the majority of those coins are being used as money, but I've seen it used as money. We know about it being used as money. And really we mean medium of exchange, right? Like to buy and sell goods and services. But there's no doubt that its use as digital gold, as a sort of a global, non-sovereign, scarce digital asset, as an investment or a store of value, is the dominant narrative in Bitcoin world these days. Um, I don't know if it needs to be used as a medium of exchange to be long-term successful. I do think it's possible you end up with, fiat stays around forever. Maybe governments never succeed in getting rid of it, but Bitcoin becomes the gold, the alternative, right? Like for millennia, you've had gold. There have obviously been times when governments issued their fiat on the gold platform, right? But we've had an untethered paper-only, no-backing fiat regime since, I guess you could say, the 70s, since the U.S. halted the convertibility of the dollar to gold. But in some cases, you could say longer, and certainly, historically, monetary regimes have shifted between hard and sound money, hard and sound money to soft and fiat money, back and forth. The Romans themselves, like, debased and rebased their currency multiple times across their empire's history. So I think it can exist next to fiat money and be very successful as store of value, which, by the way, a store of value that's gold-like but digital, transferable, self-custodyable, all of it in size, right? So, like, it is kind of like gold with wings already. It could, I don't agree with Jack, therefore, that it must be used for wide amounts of day-to-day medium of exchange to be long-term successful. I don't agree with that. I think it can be long-term successful without that. I do think it is being used for that, not at the scale that it's being used as store of value. When it comes to the state of L2s, I think Lightning it's never been easier for me to run. I'm running C Lightning right now on my Umbrel. I'm still
Are you balancing channels and stuff?
not really, and I'm not using it that often. I just have a couple, like, nice channels with, people I know that are, and I haven't had to, I don't use it enough or push enough coin down the channels to really need to rebalance that much. But it is not easy, to be clear. And I do prefer to use, a combination of, like, a semi-custodial wallet like Phoenix, with, like, a brokerage like River as my on and off ramp in and out of Lightning. Like, that's so convenient.
It's so I literally just have money on Primal, and I just and I'm just like, whatever. This is my Lightning wallet,
Yeah.
and I don't care if it's completely custodial. Like, it's like,
Yeah, because you're not putting, like, your life savings on there. It's like walk around money, kind of.
correct. And then if you want to do the same thing, but with self custody Lightning, dude, the hoops,
It's
bro.
very hard. I agree.
The hoops,
Well,
dude.
and Lightning, like Lightning capacity, sorry, the number of transactions on Lightning has been declining, but the size has been going up.
That's good.
Which is interesting. It makes me think that it is, maybe this is sad to a lot of Lightning, like real true Lightning believers, but maybe it is more custodial Lightning, right? Sending in bigger size, settling, right? Or it's the network also being more resilient. I don't know. I think Lightning is extremely useful. I think it's by far the most decentralized L2 across the entire crypto ecosystem. It is not even an L2, right? I mean, it is a network of overlapping bilateral payment channels that happens to form a network. It's not stateful. There's no coordination across the network, right? You can't even get a good view on the data on what's happening on the network unless you yourself have a highly connected node, right? So it's extremely decentralized, and I think that's very powerful. And other networks like Ethereum have looked at payment channels and as an L2 scaling methodology and rejected them because, for example, you can't, like, run a smart contract that's stateful across the entirety of the network on a payment channel L2. And because of that, they sort of halted all advancement in payment channel research. Whereas I think the Bitcoiners have shown that Lightning can, and these bilateral payment channel L2s can be very, very powerful. And now if you have, like, I haven't seen it used yet, and I don't know a lot about it, but, like, the Taproot Assets protocol, you could see, like, tokens on these networks, such as stablecoins, could revolutionize them. But I will say it is not that widely used. Also, you said we know L2s need to be used. I mean, Bitcoin fees are, like, almost nothing. I mean, right now, my gosh, we've got a whopping 18 megabytes in the public mempool. There've been days and days over the last couple of months where there's literally not even a full block of pending transactions in the mempool. So, like, I think if the mempool becomes really clogged and transactions become really expensive, then yeah, that will create further incentive for more L2 development. But at the moment, like, there's not a huge need. I mean, frankly, like, which I think could be problematic. Part of that's probably because a lot of people, rather than even buying on a crypto exchange or whatever, Poloniex in 2017 and withdrawing to self-custody, they are buying ETFs and they are buying treasury companies. And those, to the extent that they hit the mempool, they hit in big batch transactions, not in many small ones. Um, so it goes also to the spam and arbitrary data dispute about, op return. And like, it's just ironic to me that we're having that debate when like the mempool's empty. Like, spam, it's barely being transacted on at all.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money, it's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
Yeah, I completely agree. What do you it's fascinating too, because a lot of people put a lot of hope on Lightning, right? And then a lot of people also put on one of my favorite things is I I would say it's favorite because I find it fascinating, which was basically like Bitcoiners had this preconceived notion that you were going to see this wide adoption of Bitcoin, specifically in developing countries that had high inflation. But what you saw instead was this viral adoption of USDT, of stablecoins instead, right? Which was like completely contradicting what Bitcoiners originally believed, because they were like, oh my God, this Bitcoin fixes this thing. But people are just like, like they wanted something that didn't have the volatility that Bitcoin had, so they can kind of live day to day. And then there's also the educational component, right? Because if you're in Latin America, like I'm originally Venezuelan, like, you get $100 bill, like that's like, that is you're on top of the world, right? So if you can have that in digital form, you know, you're in a good spot, right? What is the most contrarian or unpopular belief you hold about Bitcoin right now?
Oh man, that's a good question. Most contrarian on well,
To the point that I would just boot you off the show. If I hear it, oh my God.
well, I mean,
End the recording. End the recording.
yeah, I think, I mean, I'll riff a little bit on your last point. I mean, I think stablecoins are an incredible innovation. I think they really are powerful. I think the world wants dollars. They have for a long time. And I think, like I said this before, but you could self-custody dollars for the first time ever once now. I mean, now that we have stable coins. Obviously, the issuer for like Tether or Circle, like, and certainly any new ones that emerge under this Genius Act framework, the issuer can freeze them and kill them. That's true. Like, we know that. It isn't digital cash the way literally physical cash, the $100 bill would be. Nobody can, reach in from afar and burn the dollar under my bed, right? But and similarly, they can't steal your Bitcoin out of your address. And so it's not as good from a censorship resistance standpoint, obviously, as Bitcoin or physical cash. But it is a lot better potentially self-custodying a stablecoin than having a balance on a fintech app, right? I mean, it is better than that. And that is very interesting to me. I think you're going to see the global remittance firms, the Western unions and the trans unions, and they're going to come under significant pressure from stablecoins. I think their margins, the cost of moving dollars over borders, is basically going to zero. Whereas it's very high today. It's one of the most expensive and tricky things to do is move money across borders. Here's a Bitcoin specific one. I do think quantum will be a threat to Bitcoin. I don't know when. I think, and by the way, not just Bitcoin, we can take solace in the fact that actually EVM-based chains are significant, like Ethereum, are significantly more at risk actually than Bitcoin. But Bitcoin would be at risk, and it's not just Satoshi's coins. In the case that quantum cryptography became cryptographically relevant, meaning that you could successfully, run Shor's algorithm and break ECDSA. It is potentially all coins when you go to send them, because in Bitcoin, when you sign a transaction and put it in the mempool, you reveal the public key. So even if, the reason we say like Satoshi's coins are uniquely vulnerable is that they're largely in pay to public key addresses where the public key itself is sitting there on the chain, right? So I could right now task this computer at trying to brute force the cryptography from that on that public key and derive the private key from it. It would take, as many years as there are grains of sand in the universe, right? Like, so possible, technically possible, so unbelievably difficult as to be, infeasible. The idea is with a quantum computer capable of, step change function, more amount of computation, many step changes, that length of time could shrink to a very small amount of time. But that's why hashed address formats on Bitcoin, with N and H, right? Pay to public key hash, pay to script hash, pay to, whatever. They are the public key passed through a one-way hash function. And there's not even really the contention in quantum research that they could reverse a one-way hash function to then find the Bitcoin key, public key, to then brute force. So those are safe when they're inert. But even from those hashed address formats, when you go to spend, you reveal the public key. And the idea is that even, again, assuming that we ever get a cryptographically relevant quantum computer, the distance between needing a year to brute force something, you could just spend forever on the Satoshi's public keys are available. So like anyone could be trying to brute force them right now. You can't really brute force a hash public key address, but when you go to spend, they will sit there in the mempool until they're confirmed. And so you could imagine that if we get to that point with cryptographically relevant quantum computers, that the time, it takes a year to a month to a week to a minute to break. Like, once you make that key breakthrough, you have to basically adversarially assume that they will get so good that they could break it instantly in the mempool. So we really need something better as a solution. And there are solutions being worked on by many Bitcoiners and Bitcoin developers that exist. So while I do believe it will be a problem at some point in the future, Bitcoin can also upgrade. There's interesting new hashing algorithms and address formats, as well as really interesting commit reveal scheme that Taj Dridja, the original white paper author of Lightning, proposed last week at Presidio Bitcoin. So there are solutions, but I do think it will matter. And don't ask me when, because I don't think it's soon, but I also have no idea. But it's not that soon. When the two big questions obviously are when and how do we fix it? I'm pretty encouraged after going to this Quantum Bitcoin Summit at Presidio Bitcoin last week that
Tell me more.
Yeah,
Tell me more.
the
What
how to
are the
fix
solutions offered?
isn't as scary as I had thought.
It's not, but it has to be a hard fork.
Yeah, it may. The commit reveal scheme, yeah, it's not clear if it has to be a hard fork yet. It's not clear. It does have to be some kind of fork, probably. There might be ways to do. There's a new signature schema called Sphinx Plus that Lahalu from Lightning Labs, Roast Beef, proposed or has advocated for. I don't think he's the original creator of it. That's compelling. Don't ask me to explain it in detail. I am not a cryptographer, but it's compelling. Some of those schema require very large signatures. So you could be looking at either a block size increase to implement them or just many fewer transactions per block, right? So lowering the TPS of Bitcoin in order to accommodate that. But those could one day also be reduced. We don't know. And then this commit reveal scheme is sort of like a break glass in case of emergency. There is a way where you could create a proof a system of proofs where you first broadcast a proof and then later broadcast the coins. So, and I think Taj is going to put something out on this soon. And so we'll see. I'm also planning on writing a big paper on this, over the next month or so to explain what my understanding is of the current state of the problem and some of the, top solutions being proposed. I don't think you're, no one really knows when cryptographically relevant quantum computers will happen. Maybe governments do, but if they do, it's classified. I think one thing worth pointing to is that the US government mandates that US government agencies be off classical cryptography by 2030. So that's 4.5 years. That's not
Ooh.
20 years. So I think it will be relevant. I don't think it's a reason to buy or not buy Bitcoin today. But I do think that Bitcoiners should be, look, even if it doesn't happen, why not work on potential solutions for it? That's sort of my viewpoint.
Yeah.
Anyway, maybe that's contrarian. I'm not sure. It seems to be becoming more popular right now. These.
I I would say that the tether, for anyone who understands stable coins, it is contrarian. I'm on your camp, by the way. I love them. I think they've like basically changed the world of anyone that's living in a developing country. Like the fact that you have access to dollars, like literally gives you a new shot on life. I think it is contrarian because I think a lot of Bitcoiners expected that to be Bitcoin. But fundamentally, like what in my mind, I'm like, dude, aren't you a free market maximalist, bro? Like the free market is selling you something, right? And I think stablecoins are a stepping stone towards Bitcoin because it gives people access to digital wallets and then they're just one step away, right? And I think anyone that adopts a digital dollar, you're going to come to the realization very quickly that we've come to the realization in the West that inflation sucks. Like if you're coming from double digit inflation and you're switching to a stablecoin, you're like, wow, this fixes everything. But couple of years, you're going to start to feel the inflation of the dollar, and then of course this is where Bitcoin comes in. So I see it as a Trojan horse. I think the Genius Act was incredibly positive for the industry. Um, so I completely agree with you there. Now, regards to quantum computing, I don't know enough. What I do know is that it's like the way that the computer is like built. Essentially, it basically allows the binary to be in a quantum state. So basically it's able to guess numbers a lot faster than the traditional computer.
That's basically what I know.
Yeah.
To be fair, I don't want to put myself out as I'm neither a cryptographer nor a quantum computing expert. I am a Bitcoin researcher, and I attended this conference in San Francisco last week for the purpose of learning what people are thinking and working on, not because I'm myself contributing to the quantum research. And I will say, I also am told and witnessed and told by a lot of smart people that they're not close at all. I think the issue is they have made a couple breakthroughs that make it plausible that there could be the additional breakthroughs that one day lead to the cryptographically relevant quantum computer. So like it's not close in like a linear standpoint, right? And also point out that some very smart actual cryptographers I know, like Peter Willa, like Bob McElrath, are not concerned at all and don't think it will ever happen. So, to me, I think it's fine. I certainly don't want people to think that I'm spreading it like FUD. Very much the opposite. I do think it could happen. And so Bitcoiners, I mean, a lot of people like to say, well, surely the nuclear launch codes or like Wall Street are like at risk too, like, as some kind of argument, like it's like a whataboutism argument. And I say, well, yeah, I mean, anything that uses cryptography, if this happens, could be at risk, right? But surely it's somebody else's job to work on the nuclear launch codes and Wall Street. That's not our job. Like that's somebody else's job. But like if you care about Bitcoin and you own Bitcoin, then maybe it is your job to get involved and think about how solving it. So I think the nihilism in the face of what could be a big deal is also very short-sighted and not helpful. So I'm very supportive of people thinking about all different types of threat models that could impact Bitcoin, including quantum.
Gotcha. Well, if you have any final thoughts for the audience and what you think, don't want to hold you to it, but what do you think? Where's the price of Bitcoin at the end of the year? And what are your final thoughts towards anybody who is watching this?
Yeah, in December of 24, I said in published research saying that it would hit as a prediction, 185K US dollars during Q4 of this year. I still think that's very much in play. I'm not really, I was asked if I would adjust that. I'm not adjusting it. I think that's bullish and also fair. I think, look, I think to me, I've been dollar cost averaging into Bitcoin for at this point years. And I view it as a savings technology with extreme sovereignty properties as well as transactional capabilities. And I think that's just an unbelievably powerful thing. I think when you compare it to other digital assets, it is the best single asset. It's not the most composable network, right? There are others that have more features, but I think, when you look at it, and I say this, and as someone, we write research about all crypto markets. I think there are interesting things. You can't really do stable coins on Bitcoin. Sure, you could do something like the Omni network, like Tether used to. Like stable coins broadly are not happening on Bitcoin, and I think that's okay. I think it's great for Bitcoin to be focused on the sovereignty, store value, censorship resistance properties of its asset. Like BTC, the asset, is a revolutionary asset that I think everybody should know about, should consider whether they want to own some of. And I think particularly as you go into this, I mean, we are certainly, I think, through, in my view, Pax Americana, right? It's like 91 fall of the Soviet Union to like, I don't know, maybe like 9/11 or 2010, somewhere after, maybe after the great financial crisis. But today, I think it's now very clear, with how the world is treating our debt, and, declining demand to use US dollars in things like international trade settlement and sovereign wealth funds, that we are probably in a more multipolar world. The dollar is absolutely still the best, of the worst, which are all the fiat currencies. But I think demand for debt is waning. I think stablecoins can help, um, continue and maybe grow dollar dominance relative to the others. But it does feel like the cat is out of the bag. The world is going to be more and more ready over time for a global, decentralized, non-sovereign, digital, scarce commodity money like Bitcoin. And I think, 16 years in now to this Bitcoin thing, and Bitcoin's still 60+% of the entire crypto market. And that's with tens of millions of coins having been launched. So I just encourage people, even, friends of mine who are interested in other digital assets, clients and counterparties of Galaxy will not be surprised to hear me say this. I say this all the time. Surely you must have considered a Bitcoin position if you're already deep down the altcoin rabbit hole. I do think there are other interesting things happening in crypto. It's not all scams, but I think you're crazy if you're not already owning Bitcoin before you look at the rest of the stuff in this market. That's what I'll say. I'll leave it there, Nico.
Well, Alex Thorn, thank you so much for joining me on Simply Bitcoin IRL. I really, really appreciate it. Guys, you can find more about Alex. Go give him a follow on Twitter if you're not already doing so. It's Intangible Coins, at Intangible Coins. Alex, thank you so much for joining me.
Thank you, Nico.